Hello, this is Bill McAfee. I'm the president of Empire Title Company here in Colorado Springs, Colorado. We're going to give you another update out of our multiple listing system, which includes El Paso, Teller, parts of Pueblo, and parts of Douglas. One of the things I want to do is give you a little geography lesson. This, just in case you don't know, is the country of Greece. It is about the size of, thank you, Vanna, it's about the size of Alabama with about 11 million people. And what you're asking yourself is, how could it possibly affect this? Well, I'm going to give you the answer to that, and to help me here is Shrek. Okay, and what he's going to do is say, donkey, it's like layered like onion. It's like, ah! Okay, here's what's going on in Greece. They're about ready to default, or it appears that they are. It's driving the euro down. Spain is on the way, and it's creating so much uncertainty in that part of the world that they're buying our debt like crazy. They're giving up yields for safety, and what that means for us here in the United States is they're going to pay more for less yield because it's safe. Well, what that's doing is that's driving interest rates down like crazy. And if you'll take a look at this slide right here, we're at 4.27. That's national average at the end of July. And just to let you know, it's dropped more since then. We're going to probably see 3.75 30-year fixed mortgages. We're going to see investment loans that are just a pinch over 4. So we're going to see some phenomenal things as it comes to interest rates, simply because of what's going on in Greece and other parts of the world. Looking at this, our average sales price was about $221,000 and change. That was for the month of August. Now, notice this on a long-term trend. This is on a 12-month renting average. Prices are dropping. I said that was going to happen at the beginning of this year, and it is for two reasons. One, the banks are dumping the property into the market. In other words, the ones that have been foreclosed are being dumped back into the market, and the upper end, there's just not demand. Simply put, we don't have the income to support that upper end market, so it's dropping down. Median sales price, $191,000 for the month of August. And again, on a running average, you'll see in this drop down, not a big surprise. But guys, listen, under 200,000, we're starting to run out of inventory, especially on the bank stuff. We're seeing price leveling and increasing in that. 250 soft. When you get to the 400 or 500, we're still very soft. Looking here, number of sales on the previous 12-month running average. One of the things that we're seeing here is we're starting to see an increase even on a long-term trend. Now, what's amazing, this was last summer, and that was when we had that home buyer credit. What we did is we ended up stealing buyers from the future. What's amazing right now, with interest rates going down the way they are, the number of homes selling is actually starting to pick up even on a long-term trend. Looking here, active listings. This would be more of a historic level of active listings. Even though we're still a little bit above that, the trend is down. So on the law of demand and supply, we're simply getting down more and more. Now, two reasons for that. One, the rental market in our market is fantastic. The vacancy rates are almost zero. Rents are going up. If you ever thought about being a landlord or an investor and owning an investment property, again, interest rates are at historic lows, and you can buy these homes inexpensive enough to have positive cash flows. Looking here is the inventory number for months. 6 months is what I call neutral. That's between a buyer and seller's market. We're still a little bit high at about 6.63. If you look over here at these inventory levels, 04, 05, early 06, notice that we were around 4 and 5 months of inventory in there. That's when sometimes we were pushing 1,400 units through the MLS. This month we had, or last month, in the month of August, we had 832. Going here, the year-to-date price ranges, the 300 to 400, even though we're not seeing appreciation in that price range, what's going on is if you take the total number of units that are being sold in that, it's actually the most improved last year, and it will be again this year, because what's happening, interest rates are so good right now. People who qualified in the high 2s are going up into the 3s, and the 4s are dropping down. So that is the most improved, but still the 250 and below obviously are the popular price ranges just based on income in our county. 74.2% are selling below 250,000. Months of inventory, this is a leading indicator, not a lagging. And what I like in this, everything below 250,000 and down, notice all below 6 months. We're starting to move over to a seller's market in here. So here's something I want to say to you buyers. I know you're reading and hearing in the national press that real estate prices are still coming down. You know what, in El Paso County under 200, they're not going to be coming down. Simply, we don't have enough inventory in there. Now, if you're up here in the 500 above, by the way, that's the 4 to 500, we still have 12 months of inventory. 12 months of inventory generally makes you want to kill yourself. It's just a hard market. Now, the good news about this is these are all coming into check. If I went up to the $1 million markets, we have 3 years of inventory in that. Bottom line for sellers, and basically anything 3, 4, and above, you better price it right, and it better be in fantastic condition, or it's just not going to move. Okay, here's a year-to-date, just going over everything. Again, not a surprise on median and average sales prices dropping down. I thought they would be down 4 to 5% by the end of the year, but because of the interest rates, what's going on right now, it will likely bring more people into the market. So we may not be down as much as I thought we were going to be. The residential units sold were only down 0.7%. Again, with interest rates dropping down, you're going to bring a lot of low-end buyers into the market that wouldn't have been able to. You've got inventory levels are down about 2.2%. Not a surprise, basically, because of what was selling last year. Two things are happening in our market. Again, the rental market is so fantastic that people are renting instead of selling. Another thing that's happening here with the military going on, a lot of military guys are coming in and they're renting. You have everybody who went through short sales and foreclosures who can't buy. Our rental market's fantastic. The number of listings is down 12.6%. Again, I go to demand and supply. The fewer units there are, the less there are for buyers to look at. Again, buyers 250 and below and definitely 200 and below. You better jump in and save your interest rate. Foreclosures are down almost 27% year to date. They were down 9% from 9 to 10. Here's the cool thing for you out there. If you're going to buy right now, you got to lock in. And when I say historic low interest rates, I can't find when they were lower. So you guys are saying, I'm going to wait for the rates to go lower. You're going to miss out on an opportunity if you don't jump in, okay? So here's what I like to say. You need to consult your local real estate agent. If you're thinking about buying, if you're thinking about investing, if you ever thought about being a landlord, and think outside the box. If you have an IRA out there, you might want to do a self-directed IRA. There's a lot of ways to finance these. So this is Bill McAfee. I want to thank you for being a part of Empire's Update. Have a great day.